So turn to the broader markets and to the markets in general. We have seen a fairly decent pickup today. Probably a bottom has been put in, and I think the best person who can analyze this is a person who studies the charts very closely. Joining us now is Sushil Kedia, President of the Association of Technical Market Analysts. He's also joining us ahead of the Atma India Conclave 2015, which is scheduled to be held this weekend, where a bunch of expert technical watchers, technical experts on a range of markets are going to be making their presentations. Sushil, thank you very much for joining us.
Pleasure is mine.
Well, we will come to your conclave in just a minute, but first, really, how do you look at the markets at this point in time? We saw what, 8 days, almost 8 days of consecutive fall, some 600 points wiped off for the Nifty. Are we finally finding our feet? Are there any technical supports at this level?
Lata, what I would like to begin by saying is that what Sonia mentioned some minutes ago, and now you mentioned 8-9 days of decline, and you both have been catching markets so well. 8-9 days of decline, a point of inflection exists today, and if 8290 on Nifty cash, this chart that I'm showing you right now is the hourly chart. If you will notice, the RSI, which measures the momentum or the speed of fall, with subsequent lower lows on the price, if momentum is not lowering down, it's like, car keeping moving in the same direction, but the speedometer is showing you receding readings, and the reversal is quite likely around then. And then when you combine with these 8-9 days of fall, and when you go to this, daily chart, again here you notice this momentum divergence. So I would say a rebound back up to 8500 is very much built in as part of the normal trading noise. Should that be taken out, one would then say a trend reversal has really happened. And I would say one should ideally not be taking new positions today and tomorrow when you are in a point of inflection. That is for the short term.
Okay. Sushil, hi, morning. So you say that once the market rebounds to 8500, then the trend could reverse. But up until then, what could the downside in the near term look like?
Sonia, I'd like to take the opportunity of refining myself. 8500 is what it can go up to, but for very short-term trading signals, what one ought to do is take a long position only if you see I follow a system where, I would take a long position if I see a 4 days new closing high, a higher closing on, the prior 4 days. And if indeed tomorrow market's closing is lower than yesterday's close, I'll go abandon this idea of a potential reversal and inflection here and go whole hog for playing to 7700. And as a few technical experts have mentioned on your channel in the recent past, what is this currently going on? It's a complex correction. And in simpler words, a complex correction is one wherein you will find a lot of overlapping moves and not very large clear trends. So to summarize this, we have to be tentative. 200 points of noise is very much a part of the current levels of the market.
Okay.
And I think, trading signals are better taken on a rebound. On the short side, the medium term still looks like 7700 should come before 8600 is seen.
Okay, that's interesting. Well, you said only for the short term. That's how you qualified your previous answer. If you were to look further into time, say in the next couple of quarters or even 2015 generally, how are the markets shaping up? What is the likely probability? 7,600 or 9,000?
See, actually, the 99% range, if I can borrow such euphemism from statistics, is that 7,600 to 9,000 is the real range. Now, within which if I have to make a guesswork, I would say, while this correction has set in, there are prospects that we should get closer to sub 8,000, 7,700, 800, whatever, and then go back to 9,000. And Lata, allow me to jump in further on the longer term trend here. Whether it takes 2 years or 2.5 years, I think the Nifty trend is perhaps good to go all the way up to 13,000 also. It can take a couple of years or more. I know, bullish statement looks good and I seldom give that. But if you go back and say, look at how things have been over the 5-year period, from the 2007-8 high, and all the way up to this breakout in 2013. And basically, this is true of almost all equity markets. After a 5-year consolidation, we have taken out to detailed a talk. It will be if I give you how I project 13,000. But those who practice point and figure charting will know that that's the obvious target, and people can go and plot that on their softwares.
Okay.
Okay, that will be music to the ears of a lot of investors. I mean, the fact that Nifty could go up to 13,000 in the next couple of years. But Sushil, what are the stocks that could actually lead it there? Because we've seen many of these names already correct about 15-20% from this year already. Names like ICICI Bank, etc. For the longer term, what are the stocks that could take the Nifty to that 13,000 mark?
See, that's still a very conjectural, theoretical surmise that is the kind of potential we have on the markets. And that will take a long time. The earliest I say is about a couple of years.
Yeah.
And within that sense, if let's go by the process of elimination. And I would also like to chime in one more point here, which is a phenomenon that has returned to markets after almost 10-15 years. See, if currency has been depreciating, broadly that's the trend on the rupee, the long-term trend, and still equity markets are going up. This has happened seldom in the last 10-12 years, but that was the kind of theme that played out in the 80s in the United States as well as in India. And during the days or weeks when the rupee will be very weak, there will be certain sectors that will correct much lesser than the level of appreciations you will see in those sectors during the time rupee is strong. Say sectors like IT or pharma that have sort of, led the gains here. I won't be really surprised for despite the fact that, these look to be very overbought on the short term and despite, 10-20% correction that can always seep into them. These might still be the engines for the next couple of years. The so-called looking defensive. See, this bull market is appearing so much more like a rally with narrow participation, most people having a feeling of being left out, even at the institutional level. So, it may not be surprising that the so-called defensives only may still be the engines of this bull market ahead. We may not ever see, it's not necessary that we have to see a secular participation from all the cyclicals.
Okay. Well, I'm dying to come to your conclave as well, but just one more question to finish off this market discussion. The comfort zone you have in terms of the near term, if the markets were to go to the 7,700 mark, which would be the leaders that would take in there, or which would be the worst of the laggards?
See, as of now, I think the banks are going to be basically driving the movement each side. So I don't see them to be, the exceptional stocks. They are rather the stocks that will take them to the downside. Rather, the consensus on IT stocks as, the IT and pharma that have been so far falling, that's where the upside risk is for any bear. Those are the sectors to watch out, and once, this bottom might have been made at 7,700, that's also not sacred. We'll see when it comes there. I think, the gains will again come back and be driven by this so-called defensives only.
Okay. Well, I want to come and discuss crude and gold and other asset classes as well with you, but let me take time out and just ask you about your conclave. What are the various themes that you will be discussing? Tell us about your conclave really.
Okay, see, there are so many formats of analyzing markets. The fundamentals are primarily more popular, and in the recent decades there has been so much of quantitative refinement, and technical analysis somehow I've felt is the universal language of markets. You speak the same language across any asset class, so we have representation across market outlook on equities, bonds, currencies, rates, commodities. And then there are, again, why technical analysis, again I say, is the universal language of the markets. You can discuss markets on a one-year time frame to a one-decade time frame using the same thought process, which is what is absent truly in, when you apply that to fundamentals or quantitative. So we've tried capturing that theme, representation of all asset classes and all kinds of analytical styles, and we've fused in a heavy dose of quantitative and algorithmic trading, and hopefully, with so many experts gathering together and a lot of serious market participants gathering together over a 3-day period, there should be useful networking and brewing of new and fresh ideas.
Okay, I'm sure we'll get wealth of opinion there. But, I was very interested in a comment that you've made on gold, where you say that it is the best asset to put money into with a 2-year time frame. I mean, this is contrarian to what a lot of experts have been telling us. So just give us your rationale for why you are recommending buying into gold.
Okay, Sonia, I'll correct myself here. Rather than saying start buying gold right away, I will say it is time to stop selling gold or taking short positions in it. Why? This is the monthly chart of gold here. If you notice the same simple idea, it has been forming lower lows here, but the momentum has started forming higher highs. That is the first sign of contrarian accumulation going on. So if the big boys in the deep pockets are right now accumulating gold, I of course, will not say most people have those kind of deep pockets, but then you go with the big boys, the central banks or whoever is doing it, and we should be avoiding taking the short side on gold for now, And over time, once we break out of this upward band, say once we are above 1300 odd, that's where I think the bull market with an abandon in gold should begin, and the all-time highs would look like a minor joke. We might even go to 2200, and coming back quickly. See, most of the time the logical, rational mind is focused on explaining things on fundamentals, but we tend to end up forgetting them only at the right time. If every government in the world has been minting cash with abandon, and the natural super currency gold has to prevail, those fundamentals will come in place. And right now the technicals have started displaying that everybody's sentiment has been just going on with this uptrend in the US dollar and this mad kind of weakening going on the JPY. But I think once that subsides in a couple of quarters, the mad bull market in gold will resume again.
All right, Sushil, it was a pleasure speaking with you and hearing out all those strategies as well as about your conclave. We'll of course get a wealth of opinion from that conclave as well. All the very best for that conference.